So trade back in focus following President Trump's pushing ahead with 10% tariffs on an additional $300 billion worth of Chinese goods. What does it mean for your portfolio? Kathy Entwistle, Senior VP of Wealth Management at UBS, joins us now. And I'm just curious, are you getting a lot of questions from your clients since the president tweeted about this? Are people paying close attention to it?
Absolutely. People are paying close attention to it, and they're certainly paying attention to the volatility in the markets. That does keep people up at night, and it's giving them a little bit of nerve. So all of the volatility that we've been seeing, I think, is starting to play on our investors' confidence.
And just seasonally, it's kind of a tough time. I mean, you got people on vacation, it's September, setting up for the fall. So do you think that we are in here for this to get a little bit choppier?
It's hard to tell for sure. I think that one of the things that you brought up in your introduction was with President Trump tweeting about the 10% tariffs, and certainly we saw the market drop precipitously immediately following. So nobody likes to see that uncertainty with relations with China and President Xi, and I think that that's going to be a big issue going forward. And the tariffs are starting to come into play in the economy. We're seeing it a little bit in our jobs numbers that were reported. We're seeing it in a little bit of the manufacturing numbers that have been reported. And the trend, the 6-month trend is showing a slowdown. So I think that's something to pay attention to.
Kathy, this has been a wild week to say the very least. What adjustments do you make to the portfolios in this type of environment?
Well, we try to look at the portfolios for more of a longer term view. But what I'm trying to do with my clients' portfolios is think about how to protect on the downside and use certain types of investments that will help there. We're also focusing a little bit more on U.S. stocks, large cap over mid and small, and just trying to keep the portfolio very solid and very clean.
Are you raising more cash?
A little bit of cash. We're trying to take some of the profits. We've had a great 10 years in the markets, and we are trying to take a little bit out for right now and think about different ways to deploy that capital on behalf of the clients and their investments, but maybe just in a different way.
Kathy, I did want to dig in more on clients. I was just looking at your page. You have business owners, you have senior level executives of public firms, and millennials. I want to talk about the millennials because they may not have been exposed to the market during the 2008 financial crisis. They may have seen their parents, and they might have scars from that experience. So when you're having conversations with your younger clients, what is that like? What are you kind of talking to them about these days?
Absolutely. And the millennials, I think, were really affected by 2008 because at that point, a lot of them were still in school. They were having trouble getting jobs, and they were affected by the markets back in 2008. So they are a little bit more hesitant just to begin with, even before the volatility showed up in the last 6 months, 12 months. But what I tell them is a lot of them are still in the earning growth phase, and they're doing a lot of dollar cost averaging into their 401ks and into their investment programs or plans. They're more likely to do a little bit at a time and not put all of their money into the markets at once, which is a great strategy, especially in a volatile market. So basically, it's more like explaining to them the time value of money and compounding interest and the value that will be to them as they get older and they can put their money away for the long term and not look at it. So if they have money that they don't need in the next year or so, put it away and invest it, it's still a great idea for them.
So obviously the longer time horizon that you have, the more aggressive you can be. But you talked about protecting on the downside here.
Yes.
So with the Fed, questions there, with trade questions, how do you do that? What are the instruments that people can use?
Okay, so one of the instruments that we use, and it's really for a little bit more sophisticated investors, so it's not for everybody, but we'll use things like structured notes where we can pull some money out of the equity side of the portfolio and put it into some structured notes to give a little bit of downside protection. It also caps out a little bit sometimes on the upside. There are many different types of notes and ways to invest in that type of product, but I think it makes sense for a lot of our clients, especially our ultra high net worth clients.
Kathy Entwistle, Senior VP of Wealth Management at UBS. Thanks so much. Great to see you.
Happy to be here. Thank you.